Hey guys, it's good to see you all once again. Today I have an interesting gentleman on the set. His name is Jonathan Ang Wei Shan, right?
Yes,
I pronounced it right.
That's right. That's good.
Now let me tell you something about Jonathan. He's a very young gentleman. He's a full-time investor and the co-founder of 10x Capital, one of the active stock investing schools in Singapore. He's also the co-author of this book, Value Investing, Expanding Your Circle of Competence. Jonathan has a passion of inspiring and teaching young people to take action in investing, and he's trained over 100 people in investing. His influence extends beyond Singapore and he's recognized internationally. So Jonathan, thank you for making time to meet me.
Thanks for having me. I'm very glad to share about the investing experiences.
Right. And how has been your day?
I think my day has been absolutely great. In fact, this past few weeks has been amazing for me. We've seen some very historical movements in the stock market, and I think anyone with the right knowledge can really make some fortune, and not overnight, obviously, but over the next 5 to 10 years.
Right.
Yeah, if they invest in high quality companies.
Okay, well, this is my favorite part. Share with us what are your thoughts on the current market situation.
Right.
You know, it's been crazy, and so many people have different ideas on how to ride this downward trend. What are your thoughts, especially for new investors?
Right. I think let's talk about new and existing investors.
Yes.
Right. I think a lot of people are overrating how much money they can make in the downturn, and they're underrating how much money they can make in the long run. So let me explain. When a recession comes, market historically falls about 50% and all. So if something goes down by 50% and it goes back up, you'll double your money, right, in that short year. So you have this group of people who wants to time the market, and if they time it, they will announce that they're geniuses, and I mean, good for them. They really make their money. But the problem is, when you have this mindset, when a recession is over, you're going to be the first guy to sell your stocks. You're going to be the first guy to sell away your companies, right? Because you have already made 100%. And if you're someone who is not long-term minded, you'll be really worried. You'll be very anxious and worried because you want to cash out your profits, because you're just afraid that a next crash will come, and because you're always so obsessed with timing the market. But what most people don't realize is that if you could find a company that can compound and grow its earnings by 15% for the next 10 years after a recession, you're going to make so much more money than making that 100% during the recession, right? So are you playing this for the long game, right? A recession comes once every 10 years, statistically, right? Maybe in the future, we might see more recessions coming in, maybe once every 5 years. But statistically speaking, the market is only crashing once every 10 years. And the market is going to do well nine out of 10 years. So you should be not worried at all by a recession or by a crash if you are someone who's long-term, because you know that the stock markets will keep doing, your companies will keep doing well simply because of inflation, right? Inflation, why inflation? Because as long as the prices of goods and services goes up by 5% every single year, your companies can charge 5% more every single year.
Right.
So just with inflation, your company will grow its earnings, right? Because charge higher, you can earn more money, right? So a lot of people are underrating how much money you can make in the long term, but they're overrating how much money you can make in the short term. Yeah, and I think, I have met a lot of people who could have been and should have been millionaires, but because of this short-term thinking, even though they caught the recession in 2008, they bought really great companies like Master, Visa. So after the recession was over, they sold off their stocks and started waiting for the next recession.
Wow.
So can you imagine someone waiting since 2008? It's been 12 years, and they're missing a ton of money, right? So that's the thing, right? you have to have a very, what I would call a coherent mindset, right? So it's very tempting for a long-term investor to suddenly become very short-term in thinking when you see the stock prices going down. And I don't blame anyone for it. It's just human psychology. You just feel it's just very easy to be greedy, right? So that's the problem when you are not disciplined in following a framework, right? Because on one hand, you'll be thinking about, oh, you know what if the recession comes and let's say when the economy recovers, you'll be thinking, oh, when's the next recession? But on the other side, you're thinking, but I should be long term. So you have a conflict of two different beliefs that are very, very different, and that will sabotage you in the long run, right? So I have been telling some of my community members, you know, they have shown me their portfolios, and it was so obvious that they have violated certain rules that they've set for themselves, right? Because I don't impose rules on people, right? Because how you manage your portfolio is really up to you, right? It should be something that's comfortable to you. So I asked them, you know, like, why do they behave a certain way? And I realized that they have this two ideas that's conflicting each other in their heads, and that caused them to do certain things that are not really great for them, right? And they started losing money. So, you know, it's about sitting down and really asking yourself, what's one strategy that can really work for me consistently, not just for 1 year, right? For the next 5 to 10 years, and really asking yourself, do I want to commit to this strategy? Like seriously asking yourself genuinely, right? Do I really want to commit to this strategy? And if the answer is yes, then think about it, right? Think about all the different scenarios. Think about what could work for you. So, for example, if you're someone who's very passive, you're someone who is always very busy with work. I would think you're a very busy guy because I mean you're in a startup, right? Do you want, what suits you? Do you want to be a guy who collects companies and just let the CEOs and CFOs, CTOs work for you, or do you want to be more active and buy and sell companies in the next very quickly in a period of 3 months, 4 months, 5 months? So once you really start asking yourself these questions, what have I been doing, right? So I always like to tell my members, right? Print your transaction history for the past 2 years and go down the line for each transaction. Ask yourself, why did I make this buy or sell decision? And you'll start finding loopholes in your thinking and your mental model, right? So I think this is very underrated. Sitting down, having this time with yourself for like a day to really think about the next 5 to 10 years, to really challenge yourself. Is this the framework that I want to adopt for the next 5 to 10 years? I think that is underrated. No one in the world right now in the right mind will sit down on a Sunday or like a Saturday like today to think about, what is something that I really want to do? What are my first principles, right? So when we talk about first principles, I'm a fan of Ray Dalio. So first principles are really the truths that govern the entire world, right? So first principles are things like, for example, in physics, we have F equals ma, or like
E is equal to mc squared.
MC squared, yeah. These are like the universal truths. And why? And we realize that people who are really good in a certain thing, not just in academia, but for example, in their industry, they are all, if you do observe these people, they are people who are held by first principles. They have certain principles that they have, and they tell themselves that I'll be living by these principles for the rest of my life, right? And as for studying, right, if you understand the first principles really well and you truly understand it and you follow it, you're going to do well in any subjects, right? Be it biology, chemistry, physics, math, right? You follow the first principles, you're fundamentally really strong in your first principles, you'll do well in all your subjects. And this is not just in academia, in any kind of industries. And why is Warren Buffett doing so well in investing? Because he had first principles, which were very, very logical, right? Buying good companies at a fair price, right? And these companies have to be in high quality companies. Yeah. So it's the first principle is just two very simple, basic first principles, right? Buying good companies at fair price or at a cheap price. Yeah. So as long as you follow these two first principles, you're going to be safe. You're going to be good. Yeah. And a lot of people forget their first principles along the way. And I have to tell you, it's not easy because I have been a victim, or I have been I have been through that period where it's just so seductive to find and chase after hot money and fast money, right? But you realize that as you start having your first principles, you will become a better person. You become better in whatever you do, be it investing, be it videography, right? So I mean, for photography, the first principles is obviously the wanted rule. You get it right all the time. Everything's going to look really, really nice, right? So, I think that if you were to ask any investor on the street, what are your first principles for investing? Most can't really tell you. Most can't really tell you a very logical first principle that they follow. So, you want to start asking yourself, like, what's your first principle in whatever you're doing? And I think your life would just be tremendously better. Yeah.
Right. Okay, folks. Before we end, there's this game we play, and it's like this. When I mention anything, what comes to mind, you say it.
Right. Oh,
okay. So we want to try with Jonathan. So Jonathan, first word, chicken.
Nuggets.
Okay. Beach.
Sand, water.
Okay. And this one you're not expecting. Char kway teow.
My cockles. The juicy cockles. Oh my god, this is like so interesting.
Okay,
is this like a survey or something?
No, it's just fun,
Right.
At the end of every interview, you have something just to heighten the whole interview. And guys, we are so thankful for Jonathan for making time to share his journey as an entrepreneur. And he also shared about the current situation in the stock market. Stick with your first principles. It's very easy to be tempted to make a quick buck. That's what he said. But if you stick to your principles in investing, I think you will do well in the long term. Jonathan, any final words before we close up?
I think that I'm going to throw in a bonus for your listeners. And I think the number one thing that many people are asking, like, okay, I have a brokerage account, I have the money, I just don't know how to start. Like, what should I look at? So I think the number one thing that I will advise people who know nothing about investing is to consider buying the S&P 500 using a dollar cost averaging method. So if you don't understand what dollar cost averaging, it's a bit hard for me to explain through just Google it up. We have a lot of articles, a lot of people explaining the math behind dollar cost averaging and why it works. So what exactly is the S&P 500? S&P 500 is the top 500 companies in the US. So what happens is if you buy one stock of the S&P 500, you're buying the top 500 companies in the US. And the thing about the S&P 500 is that it's like cheating in an exam, right? When you buy in the S&P 500, you're cheating. You're cheating the market. Why do I say so? Because how it works is that in the S&P 500, if the 500th company goes bankrupt, okay, what's going to happen is that the 501st company will be promoted into the 500th company, right? So your S&P 500 will never go to zero unless all the companies in the US goes bankrupt. Yeah, so that's kind of like a cheat that most fund managers don't have, right? I mean, if you're managing a fund, if you lost money on a company or a company goes bankrupt, it's a real loss, right? You don't get to replace the stock with another thing. But S&P 500 allows you to do that. And for the past 100 years, I'm not talking about 5 months, I'm not talking about 1 year, 2 years, I'm talking about the past 100 years, right? Going through all the epidemic, going through your world wars, going through your financial crisis, right? The S&P 500 has been going up at a rate of about 7%, adjusted for inflation, right? 7%, including the dividends that's being reinvested back. So, your best bet is your S&P 500. Why? Most fund managers don't even beat the S&P 500. In fact, they underperform it. So if you're buying a fund from a fund manager, take a look, right? Are they beating the S&P 500? Because the S&P 500 is the market, right? It represents the US market. It represents the prosperity of how well the US market is doing. So for folks who are slightly more educated in investing, just a disclaimer, this is not a recommendation to buy or sell. This is just how I think about companies, right? And I do not, if you really want to have investment advice, you should go for a professional who's certified to advise you. So I'm looking at this, so I have some questions asking me, hey John, I want to buy into companies that are very, very safe, right? For example, Facebook and Microsoft. And these are really very, very, very strong companies, right? Microsoft is the world's largest company, right? It's worth $1 trillion, even after the 30% correction. Facebook is your world's biggest advertising company. You look at Facebook, you have Facebook ads, you have Instagram ads. WhatsApp is not monetized right now. So some people ask me, which company should I buy? And here's my opinion, right? Just my opinion. Yeah. So both companies, I would think they are growing their earnings every single year. They do not have, they do not have debt. Okay, Microsoft has debt, but they could easily just use, Microsoft has $70 billion worth of debt, but they have $130 billion of cash in their bank account as of the last quarter, right? So they could just easily, pay off the debt easily, right? Facebook doesn't have debt as well, right? They could, even if they had, they could easily just pay off with the amount of cash in their bank account. So my thought on Microsoft and Facebook is this, right? I would choose Microsoft over Facebook. So a lot of people think, oh, Microsoft is like a $1 trillion company, can they really grow? If you were to look back in the past year, they actually grew their earnings by 20%. Can you imagine a $1 trillion company growing by 20%? That's a flying elephant. That's a flying elephant, right? And we don't really see much flying elephants in the stock market. And the thing about Facebook is that somehow I don't know why, but Congress is always attacking Mark Zuckerberg, and they are trying to break up Facebook because of antitrust laws. They feel that Facebook is a huge monopoly, which I find it an irony because Google has been a monopoly in the field itself, right? But if you were to look at Microsoft, Bill Gates has already gone through his fair share of antitrust laws. Back then, Congress was saying that Bill is evil, he's out there to make money, and he went through that period of hard time. And right now, Bill and Melinda Gates, they form a foundation, and there's no dispute that Bill is one of the most influential, is one of the biggest givers in the entire world. So I think it would just be a political disaster for any politician to attack Microsoft and attack Bill Gates, right? Because Bill Gates has really gone through that, and there's no dispute that he has donated billions of dollars to help the world, to help US. And in the recent times where China's President Xi Jinping actually personally thanked Bill Gates for helping them and giving them the studies that Bill Gates and his foundation has done over the years. In fact, he has been talking a lot about pandemics even before the COVID came. Right? He has spent an enormous amount of money, right, trying to use AI to help to predict where the spread is going to come, right? So I feel that Bill, he has gone through his fair share of deal, and there's no reason for Congress to break up Microsoft. No reason at all. You think about it, most of the systems in corporate America, not just corporate America, corporate
worldwide,
all the corporates worldwide, they are all using Microsoft systems, right? So if you were to break up Microsoft, you're breaking up the entire business world, right? So many softwares are run on Microsoft OS, so many people are using Microsoft Teams, so many people are using Microsoft systems. Even the US defense system, the US Defense Force, they're using Microsoft, right, for their system. So if you break up Microsoft, you're pretty much breaking up a lot of systems that are right now out there in the world, and that would be too disruptive for corporate America or whatever it is, right? And I think that Congress will not do that. It's just too much of an economic impact, right, if you do that. And if you break up Microsoft, who else can it go to? I don't think Mac OS can handle this kind of hardcore computing when it comes to for example, defense, or maybe in the field of research, or in the field of let's say, carrying out large operations, right? So I don't think that will ever happen. But if you tell me if Congress breaks up Facebook, I don't think the world will be broken up. Yeah. So if you think about that entrenchment of Microsoft in today's world,
Right.
I think they're really heavily entrenched, and most things run on Microsoft OS and Microsoft systems. But if you were to ask me the same question, without Facebook, will the world crumble? I would not think so. People can still use Google. People can complain about it, but I don't think it'll be a huge disruption to the economy, right? So that's just my view. If you really, if you really want a better a company, a better flying elephant, I think Microsoft is something that you can consider. And not forgetting that we have this new CEO called Nadella, Satya Nadella. He has been so. I'm going to sound a bit racist here, but I'm not trying to be racist. But we have seen a lot of Indian CEOs who come on corporate America, and they are absolutely fantastic. Right? I'm not saying that the Chinese are bad or the Americans are bad, but I think there's something about the Indians. They are just very technically well versed. They're very data driven. So they're very especially now when more and more companies are moving in the software as a subscription economy, right? More and more services are tech services rather than your services that require humans to happen, right? So you have Satya Nadella coming out with like Microsoft Teams, and it has boosted the margins of Microsoft a lot. So I won't be surprised if Microsoft continues growing at a rate of 10 to 20% for the next 10 years. And you can just pull out your own Excel sheet, right? What is that 10? If you were to compound your money at 10 to 15% for the next 10 years, that would, I think, 3 to 4 times your money. And not forgetting that you are buying, in my opinion, I think Microsoft right now is cheap, right? Its current valuations is cheap. Obviously how I value things is different from how other people value things.
What's the share price now?
If I'm not wrong, I can't remember, but the multiple is 19 times. Yeah, I think it's about $150, that kind of, yeah. So that's just my opinion. It's not a recommendation by yourself. I'm just sharing my thought process when looking at Microsoft. I just think that it's something that is overlooked because people think that's a $1 trillion company and it can't scale. And in fact, Microsoft is a business that can scale really well, even though it's so big, because they don't require more humans to provide more services, right? Like, I don't need to hire a new employee just to push out Microsoft Teams, right? Because most people already have the Microsoft OS on their computer, right? So it's almost no cost to earn more money. Yeah, but in the traditional kind of business, right? If I want to have a factory, to earn more money, I have to buy more machines, I have to hire more workers. I get an incremental cost just to earn the extra revenues, right? But for Microsoft, you earn more money without incurring extra costs. So I think that Nana, you have a duty to edit this fast so that people can listen to this, because this is time sensitive.
I think this will be my next upload. I'll do it as soon as possible.
Yeah,
there was one today, but immediately after the upload, because people need to hear it.
Yeah, and I will say people who want to invest right now, okay, there are two ways to think about it. I was just sharing with Nana. So we don't know if this will become a recession. No one knows, right? Anyone who claims that they know for sure, I think you should not trust them. If you look at history, no one has been able to predict recessions consecutively, right? For many years. No one has been able to do it. But what we do know is that the virus, the coronavirus, may hit the economy, and that is why it's important to buy companies that are cash rich, so that they can tide through this time. And that's why I talk about Microsoft, right? Microsoft is easily churning $40 billion of cash into their business every single year. Free cash, right? Free cash flow, $40 billion. And so there's two ways to go about it, right? So number one, you can buy some companies, right? You can, let's say, let's just do a scenario. Let's say you have maybe $10,000, right? Or maybe like $2,000. Let's just use $2,000. 10,000 may be too much for people, right? I would say put aside $1,000, invest in certain companies that you're confident in, right? Keep aside another $1,000, just keep it there, because we don't know if this will become a full recession, right? So if it does become a full recession, that's where you can at least have some money to average down to buy more. There can be another scenario where, just like SARS, the coronavirus disappears overnight, and because of weather, because summer's coming, it's hot, the virus don't really do really well in hot weather, or like a vaccine comes, right? The markets will definitely rebound, right? Because the market is always forward-looking, right? So the market is kind of priced in a recession already, right? That's why you kind of see like a huge fall. So when that news comes out, you're going to miss out, right? Because the thing will rebound, and suddenly you'll be fighting with many buyers who will suddenly flood into the market because suddenly everyone is optimistic. So that's the worst time to buy, because you're fighting with everyone, and when everyone fight to buy companies, the prices of companies will keep going up really quickly, right? So how fast it came down will be how fast it's going to go up, right? So I have heard of people from the 2008 recession telling me that they have been waiting, and when the recession came, they still kept waiting, and by the time the recession is over, they missed out, and they don't dare to buy it anymore. So how you think about this is that you want to think yourself as a capitalist, right? What does a capitalist do? A capitalist deploys money into assets that can grow over the long run. Right? So if you're holding too much cash, you're not a capitalist, because your money is obviously rotting away at the rate of inflation, right? So I want you to picture yourself, right now in your head, right? The only way to become really wealthy is to keep collecting assets that can generate cash for you in the long run, and these assets can be in the form of companies, right? Buying stocks. It can be in the form of creating a business for yourself, right? So I think the most risk-free way is to buy into companies, because companies that are already listed, right, where you can buy in terms of stocks, these are companies that have proven to be good companies. They have products that people absolutely love, right? So obviously, if you want to come with your own company, there are some risks. I'm not saying it's not worth taking. I would definitely encourage anyone to start a business. Just that if you are more conservative, you do not have much money, you don't risk it, right? Think about stocks as assets, right? Real companies, right? You're buying real companies. The CEOs, right? They report to you every single quarter. Right? Yeah, you're a shareholder of the company. You're a legitimate legal owner of a company. So you want to picture yourself collecting these assets over the long run, and these assets will actually grow for you, right? Without you needing to do anything, right? You don't have to go to the meetings, you don't have to tell the employees to work a certain way. You have to manage employee problems. You have to manage cash flow problems. Everything is done for you by the CEO, right? And these assets will grow for you for the long run, right? So a lot of people who are short-term thinking, right? They'll just keep trying to do what I call arbitrage trades, right? Buy low, sell high, buy low, sell high. But really, the real way to become really wealthy is to accumulate assets over the long run, right? So I think now is the time where you can consider accumulating some assets when the market is cheap. Because if you think about it, if you're a long-term investor, right, you claim that you're a long-term investor and you're okay with investing things in the long run, right? Does it matter if you buy Amazon back then at $50 or $100? It doesn't matter, right? Does it matter if I bought Visa at $15 or $30? It doesn't matter, right? Because now Visa is about $100 over. Why did Visa grow so well? Because its earnings grew over the long run, right? So I have a feeling we're going to look at ourselves today, and we'll be laughing at ourselves like, does it matter if I buy Microsoft at $150, or let's say if a recession comes tomorrow, and I'm going to sound very dumb, right? Telling people to buy something now. I'm going to sound very dumb, right? In the short run, right? Let's say if it's $150 today, and poof, the recession comes, market falls further, Microsoft is at $100, right? Is it going to matter 10 years later when Microsoft is $1,000 or maybe $500? Are you going to complain that you bought Microsoft at $150 instead of $100? No, you're not going to complain, right? So that's power of thinking long term, right? This little amount of money that you can earn in the short run doesn't matter anymore, right? Because you're seeing things so big picture, and when you see things so in such a big picture manner, the chances of succeeding is going to be very, very, very high. Yeah.
I think I need time to digest it. I mean, viewers, this is really a good advice, and I would love you guys to take time and listen to this and take action. And I would say, if you want a school whereby you can learn investing fundamentals and have good mentorship, I recommend 10x Capital. They're really superb.
Thank you.
So that's all we have time for. So hope to catch you next time. Enjoy.
Right. See you guys.
All right, bye.